Is Ash Chand and Company a company in decline? This company's stock hasn't done well since its inception. For example, okay, in May or March 2017, in May 2017, the price of one share was 583 rupees, okay? 583 rupees in around May 2017. Massive slump followed, right? And we go all the way to this time, the current time, and the price is around 183 rupees. This price level has been there since like September 2022. So it's been 3 years and the stock has basically remained the same. Slight rises, slight falls, but around the same level. And the company's latest quarter wasn't good in terms of sales. Okay. For example, June 2025, quarter one fiscal year 2026, the company reported a revenue of 102 crores, as you can see, and a net profit margin or NPM of minus 13.7%. While if you go back and you see the June 24 quarter, we have sales, a slightly higher sales of 110 crores and a net profit margin of only minus 2%. And you can see OPM here is 7%, 7.5% positive. OPM slipped to minus 8%. So not only did the company experience a decline in sales, slight decline in sales, its operating profit just went from positive to negative. So we have a company whose share price has gone nowhere. Its sales have kind of grown pretty slowly over the last 2, 3 years. The latest quarter was a dud. So what is actually happening with the company? Is it a buy, sell, whatever? Let's find out. Buy, sell, hold. Let's find out. Okay. Now, what was the reason given? What was the reason for the decline in revenues? Here you can see the comparison. Quarter one, fiscal 26, quarter one, fiscal year 2025. You can see revenues declined by 7%. See this one. Gross margin, no, EBITDA. EBITDA declined by not available because it went from positive to negative. And you can see even profit and loss for the period are also not available. Like EBITDA, you can just see it right here. EBITDA went from 84 million rupees or 8.4 crore rupees to minus 9.1 crore rupees this quarter. So quarter and quarter change. Why? This is the reason. Okay, there was a year-on-year decline in quarter one revenue due to a shift in the content licensing revenues from quarter one to quarter two. So basically what they're saying that their content, they have this business known as the content licensing business, where Eschan's content, they have a lot of books, a lot of education content. It is used to train AI models, right? AI model is used for machine learning basically. It's used for training AI models, used for machine learning, and companies pay them. Now, this is not a seasonal business. So, what really happened was in quarter one fiscal year 2025, they also received some AI content, they also received some content licensing revenue. But the revenue they were supposed to be given for content licensing in quarter one fiscal year 2026, it has now been shifted to quarter two fiscal year 2026 due to maybe a change in revenue recognition. So all they're saying that this decline is only due to a timing issue. Okay. We build we build content licensing AI datasets revenues of 30 million rupees or 3 crores during quarter one fiscal 2026 versus 11.5 crores in quarter one fiscal year 2025. This gap of 8.5 crores largely flowed through the P&L, leading to the decline in EBITDA and profitability during the quarter. We expect the content licensing AI datasets revenues to be recuperated in quarter two. So maybe 8.5 crores will be added to quarter two, which means that quarter two could be a very, very strong quarter. They're saying all the decline in profitability and the decline in revenues were because of that. Now, I think that's understandable. That's a good thing. It's only a timing issue. See, it's only a timing issue. So the one thing that does puzzle me is that we are assuming, let's say this 8.5 crores is the gap, that this gap is to be fulfilled. If this gap were to be fulfilled, it does confuse me that if you look at the, hold up, why is this so sloppy? Yes, if you look at the EBITDA, right? Let me show, yes, the EBITDA, and the look at the quarter at the above. So EBITDA went from 8.4 to minus 9.1. So if this gap of 85, 8.5 actually went, see 8.5 actually flowed here, the revenues will be filled. But what about this? The loss will not be filled. It will still be a minus zero point 0.6, which does not explain that. So maybe more is to be expected. Maybe more content licensing revenues are expected more than 11.5 crores this quarter. So maybe I'm misreading the sentence, or who knows? Maybe I'm just misreading the sentence and I'm not able to understand it. But they are saying nothing to be worried about. It is nothing structural, nothing problematic in the business, just a small timing issue. Now we covered that. Let's continue with this analysis. What's going on with the company? Now, this is a performance highlight. It's a commentary by the managing director of the company, Mr. Himanshu Gupta. He said quarter one fiscal year 2026 was a steady quarter for the school and the higher education segment. So the school business and the higher education business did well. And you can see there was a shift in the content licensing AI datasets revenues from quarter one to quarter two, which led to lesser billing in that segment during quarter one versus last year. And you can see it's written here that the content licensing business revenue stream is lumpy in nature and does not follow a seasonal sales cycle like the traditional business. Now, for the outlook, they have stated that they're looking forward to NCRT releasing books on the new syllabus over the course of the year. They expect the full adoption of new syllabus books by fiscal year 2027 and are equipped to utilize this opportunity over the next two sales season. So they're expecting NCRT to finally release their new books, new syllabus, and if there'll be new books, and this has been, if new books are released, then yeah, they will be able to sell new books. And this new syllabus by NCRT will be after a long gap of like I think 15 to 20 years in the education system. So if there are fresh books after such a gap, then more and more schools will adopt them even faster. So not only will there be the normal cycle of a new book is released, so the schools will buy a new book, but also this book is according to a new syllabus after a gap of 15 to 20 years. So more schools than usual will actually adopt it, leading to or potentially leading to higher sales. So yes, they expect NCRT to finally release the syllabus, new syllabus books for all classes by fiscal year 2027. Now, despite a rough quarter, the company managed to be very efficient, continue to be very efficient, improving its cash flow metrics. So here you can see the company has achieved its lowest ever quarter one receivable days. What are receivable days? Receivable days are the number of days in which the company collects the money from its customers that the customers owes to the company for getting its goods. So of course, Ashton, like many other businesses, they will give their goods to the customers on credit, meaning they won't collect the money right now, they will collect it after some time. So you can see the lower this number, the lower these number of days, like it's 89 days, it was 92 12 months ago. 24 months ago, it was 103. The lower this is, it means that the company is able to collect cash faster. So it's more efficient. Okay, signals high more efficiency of the company. So they've continued to do that and made an improvement of 3 days. Then net working capital days. Working capital, current assets minus current liabilities. This shows how fast how fast the working capital of the company can be converted into cash. The smaller this is, it just means stronger cash flows, the more efficient the company is. All right. Very important. And you can see a sharp reduction here also. 132 days 12 months ago to 119 days. Now that takes the company 119 days to actually convert its net working capital into cash flow. Then net debt free. The company continues to be net debt free. What is net debt? Total debt minus cash and cash equivalents. Now you see it's going in the negative. Net debt is going to negative, which means cash and cash equivalents of the company are now more than the company's debt, which is a big thing. I think debt here means long term debt. I'm not sure exactly. But, anyways, it's a good thing. You can see net debt free 116 crores or 1,161 million rupees of negative net debt, meaning its cash and cash equivalents are more than its debt by 116 crores, a sharp improvement 12 months ago where it stood at 88 crores. So 88 crores cash and cash equivalents exceeded debt, and then 116 crores cash and cash equivalents exceeded debt, or I think long-term debt. Company has continued to manage inventory. Total inventory, see, it decreased. Total inventory has actually decreased. And you can see finished goods inventory is approximately at the same level. Despite higher sales, the total amount of finished goods the company has in stock is at the same level. So it's able to sell more of its goods faster, leading to faster cash flows. And its total inventory here has around 27.9 crores of raw material paper versus 48.5 crores in quarter one fiscal 25. Its raw material inventory has actually gone down substantially. So I guess it has gone to producing, or it has used up. It has used up. And despite this lost year, okay, despite this lost quarter, the quarter was not good. Despite that, the net cash generated from operating activities actually rose to 41.2 crores. So from 35.3 crores generated, the cash flow generated from operating activities last quarter, sorry, first quarter of fiscal year 2025, it has now increased to 41.2 crores. How? Strong cash generation on back of higher collections. So more money they were able to collect from the customers. As you saw, the accounts receivable days also decreased. So all of this has significantly boosted the cash flow of the company. All right. And for updates, the new warehousing facility is now functional, and the integrated this press project they are making, this is a capital expenditure for the company, is to be completed over the next 12 months. And you can see this will improve. You can read all the benefits. You can pause and read all the benefits. Main thing, improving the efficiency during the peak season. Very important. This is a seasonal company. I think, what is it? Is it quarter four? Is it quarter four? I will have to check. One of the quarters is the peak season for the company. I have a feeling it's quarter four. Then they're looking at mergers and acquisitions over the next 2 years. Okay, to fill gaps in their product offerings. All right, all right. To fulfill the gaps in the product portfolio, they're looking for a merger or acquisition of another company. Okay, and I think they're said that they're looking either in the domestic or the international test preparation segment. So they're looking for a company to acquire in the test preparation segment, if I'm remembering correctly. And finally, and finally, the overall outlook for fiscal year 2026. Even despite, okay, so I think that we had a lumpy quarter. The company had a very bad quarter. They said it's a timing issue, not anything structural, not anything wrong with the business, and their outlook has remained the same. So I may have misread it, maybe the earlier statement of why was it 8.1 crores of EBITDA positive 12 months ago, but despite the 8.5 crores they were saying from the content licensing business, the company would still be in a net loss of zero point 0.6 million rupees or 60 lakhs in quarter one fiscal 26. I could have misread it, misunderstood it. But still, they're expecting that revenues will grow to 800 crores. They will cross 800 crores from the 701 crores, 710 crores, 710 crores in in fiscal year 2025. So growth of more than 10% in revenues and EBITDA margin band, EBITDA margin range, they have improved it to 18% to 20% versus 17 to 19% of last year. Then they're going to continue with their content licensing deals for content monetization. As far as I remember, they have licensed or they have used only a very small amount of their content. And they're working with more and more companies. And it's not an exclusive kind of revenue stream, meaning it's not like they're doing content, they're selling content to one company, so they can't sell the content to another company. No, they can use their content to sell to multiple companies. They don't have exclusive contracts. And very importantly, they're going to continue to focus on working capital metrics and improving their cash flows. They're focusing on CVT examination through their test coach, and of course, they're evaluating inorganic opportunities. Inorganic opportunities, exploring to buy some other company's assets. So, acquisition, merger or acquisition to enhance their product portfolio. So, that was it. That was um, Ashchand. And let me just search what is net debt, if I'm correct. Hold up. Net debt formula. I think it's long term debt minus cash and cash equivalents. Oh, sorry, it's total debt. Okay, net debt is total debt minus cash and cash equivalents. My fault. I thought it was long term debt. That is some other financial metric. Long term debt involved in some other financial metric. I should reread all the financial metrics. So that was it. That was Eschand. Let's see how the company does. They are pretty hopeful, and who knows where the stock will go.